Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Carson here with a breakdown of the action in today's session and a look at how the week played out. And we did see a number of compelling stock moves in the session today, Ed, but the NASDAQ is facing a key test.
Yeah, right around that 10-week line, 50-day line. So that'll be a key thing to look at. But we are seeing more stocks setting up, as you're saying. McKesson broke out or cleared a nearly buy signal, so did LNTH, and Tesla is moving above a key level.
It is, so worth noting and checking in on. But first, let's take a look at the major indexes. So the NASDAQ today up about 0.1%. It looks like the Russell 2000 also was able to slightly close in the green by the end of the session, but the S&P 500 and Dow slightly lower by the end of the day. The Dow down almost 0.2%. The S&P 500 down about 0.1%. So it was a topsy-turvy day, though. We opened pretty poorly. So good to see the NASDAQ close in the green, Ed. But again, resistance to talk about.
Resistance. This was a strong week. It was nice that we came down more than % on the major indexes Friday morning on the strong jobs report, and yields were rising. So like, oh boy. So, especially since we had low volume gains for the weekend, it looks like today was about break even, maybe a little light on volume. But so we've come up because the prior week we were looking pretty dire, selling off. And it's interesting because on a weekly chart, the NASDAQ was coming right up to the 10-week line, and here we are again. So we'll have to see. We're closing above that, I think just below the 50-day line. And this shows you how back and forth we are on that. And right around the late June highs and basically last week's, the prior week's highs. So right in that area, getting above that would be really important. It wouldn't be the end all because we'd immediately come up to the early June highs. There's all sorts of resistance, and the S&P and the Dow all have their similar type tests. But that would be, something to watch for next week. Can we get above that, or at least hold in this area? Maybe go sideways for a while.
Right.
Big test because this is where we've hit resistance a lot.
So yeah, strong gain for the week, up about 4.5%, maybe a little bit more. So seeing a breather here wouldn't be surprising at all. It would actually be constructive to see things tighten up a little bit more, and might offer us some buying opportunities because, as we know, stocks can move pretty quickly. And so the ones that we were covering this week, there was a very narrow window if you did want to play small and add exposure to a couple of select names. But now at this point, some have left the station. Those trains have left the station. So, some tight action, some pullbacks, some additional buy points, or stocks that we are starting to see turn, have them flesh out full-fledged bases at this point. That would be great to see.
Yeah, you don't want to be chasing after some of these things, even though, look, when the market's shaky, some people will take those advantages, but it's not like we're in a powerful bull market. We're blasting out, and these are breaking out. Some of these are moving amid a shaky situation. So there's nothing wrong if you didn't take advantage of that, or if you took it very minimal. So, and there will be other opportunities if we strengthen. If we rally to new highs, there will be some buying opportunities along the way. We're not sure yet.
I'm with you, Ed. I'm with you. I'm in your camp. All right. Moving on, let's take just a brief look at the S&P 500, Dow, and Russell 2000. So here's a look at the Dow getting above its 21-day line. Same for the S&P 500. So we can look at that, but we still have those June highs to get to and the 50-day line as well. And a look at small caps, the IWM ETF tracks the Russell 2000. Finishing roughly flat, I think, for the day, right around its 50-day line. And this is a clear resistance level for the Russell too.
Absolutely. And look, they all held their 21-day lines today, so that was positive. But, the late June highs, 50-day line, 10-week line, that'll be an interesting area to see if they can get above eventually. We'll see. It doesn't have to happen right away, but we'll see.
Yes, we will. Okay, let's take a look at the 10-year Treasury yield by going to 0TNX in MarketSmith and look at that. A big move up in yields today. So getting back above that 3% mark in Thursday's session, I believe, or getting close to it. And now solidly back above that level.
Yeah, that's really an amazing move. Ended up being a big weekly gain for the Treasury yield after really tumbling to lowest levels in several weeks on Tuesday and Wednesday morning. It'll be interesting to see how, and actually Thursdays wasn't incorporated, so we had gotten up to about 3%. But the 2-day gain, that sort of incorporate Friday's gain is sort of there in this particular time. But yeah, so that'll be interesting to see, because the market sometimes has trouble. It can take a day or two of the yield rising, and then all of a sudden it's like, then it struggles once again. So when we have the CPI coming out on Wednesday, you could imagine a whole lot of the financial markets across the realm whipsawing back and forth as they try to figure out how to adjust to that.
And let's also take a look at some industry groups to see the action there. And let's first start off with the look at XME. This is the metals and mining group, which has really been struggling, but interesting to see it coming off of its lows for the week. Came down to test this 40 level, which is an area it's tested previously. But we saw a 1-day bounce basically, and on Thursday. So that was a strong day for the group. So, some of these mini rotations, is that what we're going to see come back into the market, or are we going to start seeing more groups start swimming in the same direction?
Yeah, that would be the ideal, and it's hard to say. It seems hard to see this really leading until we feel like the economy is bottomed out and moving. We don't actually have to be there, but if you can see it down the road, but it's nice to try to find support. But it still fell for the week. I mean, ultimately it still fell for the week.
It did. Okay, we also want to take a look at XLE. So oil stocks, which some underneath the surface had notable gains on Friday. Not sure exactly where some of them finished, but we could see support right at the 200-day line for XLE. Big weightings, of course, in Chevron and Exxon, but also coming off of its intra-week lows.
Yeah, I mean, there are some big losses and then some big gains. I mean, the weekly losses weren't too bad for oil, but really whipsawing around just like everything else. And a lot of damage in these charts. There's not many charts that look that good. It's not like a train wreck like some of the other commodities, but they're a
lot of damage.
A lot of damage, and they'll take some time for these stocks. They may come back. That certainly could if oil prices come back, but there's going to be some time involved.
Absolutely. Okay, let's check in on healthcare. A look at XLV, seeing an upside reversal on a weekly basis, so up 0.8%. And it looks like this broader group is coming up to a key level, but this has been one of the standout areas over the last number of weeks now.
Yeah, it is interesting. And it's like, even when you have the leading sector, it's really nice to get the leading stocks. And this ETF shows that. I mean, you can look in the details. I know United Health is in there, which is doing well, and a lot of other names that are doing well, but still this is not like nearly the performance of that. But we're seeing a lot of double bottom bases in the healthcare sector. This sort of has that double bottom, so it just feels a little bit of a laggard. But yeah, it's been the leading sector. The RS line has been trending higher for months, so while this chart doesn't look good on its own, you can see how great on its own. It's definitely been doing a lot better than just about everything else.
And we want to highlight 2 medical sector names today, right after we look at ARKK, to see what this looked like this week. Had a strong start to the week, so up 9% to kick off the shortened holiday week, and kept powering higher, up almost 14% by week's end. And it looks like it did hit a little bit of resistance around the 10-week line. It's done that before, got above it, but that was short-lived. This looks like it does have a little bit more power behind it. And I'm also going to bring up the index line just so we can see that when the S&P made a new low, ARK did not. So are we going to start seeing these speculative growth stocks come back? I think if we are going to see a sustained rally, we need more of a risk-on appetite in the market.
Yeah, you would think that certainly in the beginning stages you might see that. On the other hand, one reason why it did so well on Tuesday is because bond yields were tumbling, and so we'll see, can those names they continue to do it generally through the rest of the week, obviously, but will that still continue if yields keep rising? So that's,
Right.
and outperform too. Can they not just rise but
Sure.
outperform? But yeah, this was nice that they didn't undercut like a number of things like Tesla, which is a leading stock in ARK. To see if that can continue, but obviously a lot of different variables going on right now.
Yes. All right. Well, our analysis is coming up shortly on Tesla, but first let's get to two medical sector names, kicking things off with McKesson, moving above a trend line that we've been waiting and waiting for it seems like over the last couple of weeks. We don't know if it's going to pan out, but it looks promising, Ed. Up 3%. It didn't quite get above average volume today, so that would be maybe one sticking point a little bit, but this has a lot of strong qualities to it.
Yeah, the RS line is basically at new highs. Had a shallow base. I mean, look at that's a flat base. I mean, flat bases in this market at near highs, that shows you strength right there. You don't need, you can see that huge move in the RS line going back to late 2021. So really strong action, had a big run, pausing and now setting up again. As you say, it broke that trend line. It got above last week's high. It's still pretty close to the 50-day line, so it's actionable from all those, all those reasons. And it's not far from a traditional buy point. This is a situation where you really could take a starter position. Then if it breaks out, it's not getting crazy. It's not crazy extended like some of these stocks with 30, 40% deep bases, and they run up to buy points. And it's like, they feel like, wait a second, this is getting away from us. But this one is showing a lot of positive action. Doesn't have the most powerful growth, and its earnings are actually supposed to fall this year. So that is one thing to note. But definitely a leader in a strong group.
Yes. Okay. And we also want to take a look at LNTH. This is in the medical products area, a strong move. Now, we did get some above average volume today for LNTH to accompany that more than 7% gain. It's been hovering around its 50-day line for a little while here. And you can see that a couple quarters ago just had a huge earnings gap that sparked a very big run. And typically when we are in bull markets, I mean, these are the kind of stocks that we're drooling all over. But in a bear market, do you really want to stick your neck out there on a big earnings gap like that? Well, it's been on our leaderboard watch list for a while, had some nice triple-digit growth last quarter. And today, a potential starter position entry.
Yeah, I mean, you gave a lot of great reasons, like huge growth, big prior run. It doesn't have a new base yet, needs another week, but broke above the 50-day line, broke a trend line right above, like just above some of that short-term levels, or getting above there at least intraday. And so, yeah, definitely reasons why you could start a position here. The RS line is right at highs, and really, since this is a daily, on a weekly, you'd really see how much that RS line moved up. I mean, that just completely skyrocketed and then raced higher from that. That's just an amazing performance. And, with those kind of earnings, you can understand why, and sales growth. So definitely this has a lot of really great qualities.
It does. And I guess the one thing, though, that makes me nervous is that since it hasn't paused long enough quite yet to form a base, and this is the first time that it's retaking the 50-day line, does it need more time? Sometimes, and of course it all depends on market conditions, but sometimes when you see a stock retaking the 50-day line, it doesn't, it's not automatically going to then race to new highs. So it'll be interesting to see how this one acts after a strong day like today.
Yeah, and a lot of people were looking at this, not just us. So you're right. That's something that have to be watching for and be ready to, you might have this bullish sentiment and just have to be able to step away from it. If that doesn't work out, you have to just say, well, that didn't work this time.
We'll have to see. Because, a little bit of a, tries not all too long ago didn't close well. So the difference today, closed well and had the volume. So those are definitely two elements that you really need for a nice move. So we'll have to see. And let's also take a look at Tesla. Notable today in that this was the first close above the 50-day line in a number of months here, Ed. So fill us in on the stock action and some of the headlines at play here.
Yeah, I'm not sure to what extent the headlines are out there. There was June China sales, and there have already been some preliminary numbers, and we already had two Q2 global numbers. They were very, very strong, over 78,000, almost 79,000. And there's a White House memo that says Tesla is going to start opening up superchargers maybe by the end of this year. I'm not sure if it's going to be the actual network or start making the equipment to do that. There's pluses and minuses to that, but that would be a big development. But yeah, it's big gain this week, getting above the 50-day and the 10-week line. You know, the prior week, just like the NASDAQ, it hit resistance right at the 10-week line. So getting above that's nice. You know, arguably, since this didn't close low, you could sort of argue that this was sort of a mini consolidation the last several weeks. I mean, it's not a, you can't even call it a bottoming base because it was too short for that. So I'm just saying, like, I can imagine if you were a very aggressive trader, and you'd have to understand the extreme risks with this because the market turns lower. Tesla hasn't shown that it can outperform the market dramatically in the last few months. In fact, it's underperformed. So if this market goes down, 90+% chance Tesla's going down too. So just be clear. So you would be an aggressive bet. But if you wanted to start a position knowing that maybe later on you could add to it, maybe. But again, that would be very, very aggressive. But we are starting to see some of these names, Tesla, Google, ServiceNow, some other stocks that didn't undercut their lows, that are sort of setting up a little bit better, something to watch. If nothing else, signs of strength in some of these major big companies on the market.
Yeah, a step in the right direction. Still a long way to go. Almost 40% off of highs. But let's see. Can it continue? And can it get above that 200-day line? And I think then it would really start getting on the right track for our sweet spot of investing with those that 50-day and the 200-day or 10-week and 40-week, because we are on a weekly chart here, stacked and rising.
I think that would probably be what for most people should get. Wait till it gets all the way maybe above the 200-day line, above to 1,000, maybe then consolidates from there and then something. But that is, that's a long way away.
Right. And some people might say, why wait till 1,000 if I can buy it at 752? Well, it needs to prove itself. It may not get to 1,000. It needs to prove that it can work. If you want to outperform the market, we like buying strength, and we like seeing stocks that can outperform. And like you said, Ed, it's only just starting to show some signals, some subtle signals, along with some other bigger names, that there is a little bit of outperformance underneath the surface there. So
yeah, absolutely,
we will stay vigilant there. All right. Well, another week in the books, Ed. What should investors be doing over the weekend to prepare for the week ahead?
Well, I mean, we always talk about it, but definitely be building up your watch list, because there are more stocks, more sectors that are showing up. We don't know how next week will go. I'd also get a broad list, but focus in on, 5, 10, plus stocks that are what you think are actionable or
your
setting up to be.
All-star team, as Eric Kroll was saying this morning.
You have a farm system, and so some might be in single A or something, but there's others that are triple A. Are they ready for the majors kind of things? There's those hot prospects.
Yeah.
And there's something along those lines, and just be ready. It's like, if the market continues to improve and your holdings continue to improve, you can gradually add to exposure, but you have to be ready. Look, we're at a turning point, perhaps, and again, it doesn't have to be that turning point actually has to happen on Monday or Tuesday or Wednesday, but we're at a level where eventually the market is sort of going to break higher or lower, it seems like. And so if the market breaks lower, it could break, all those gains from this week could quickly vanish. And you have to be ready to get out, ready to get out. And so and the more aggressive you are, even more aggressive you have to get out. And that's really hard to do.
And also, with all of the various medical sector names that are looking good, something you're always good about pointing out is making sure that you don't get overly concentrated in it. I get that there are different industry groups, but really is that diversification? If you're just buying, a medical products company and a medical software company and a biotech, is that really having a diversified portfolio there?
Yeah, not too much. I mean, there's going to probably it's not the same as buying all the same company or all in the same subgroup, but yeah, that's an issue. And also, let's watch out for earnings. There's like United Health has earnings to speak of. That's one that's out there, and that'll affect all the insurers. That's next Friday. So not just pay attention to the earnings in your portfolio or on your watch list, but the key rivals or customers and suppliers, especially those first few, that set the tone for the industry, and people get a sense of that. There could be a lot of guidance cuts, a lot of misses with the economy down here. On the flip side, companies that come out and have strong results, strong guidance, or at least decent guidance, they might do very well. But I think this is going to be a very important earnings season over the next 2 or 3 weeks, given the macroeconomic climate.
Absolutely. And to be clear, having sector concentration can work. I mean, we saw that earlier this year with oil and gas. If you would have loaded up on a bunch of different names in the different oil and gas groups, you would have been doing pretty good this year. So it can work, but you just have to be careful, because like they can all move up together. Again, what we saw with oil and gas, they can all come down together pretty hard as well. So you just got to be careful of that. That's all.
Yeah, absolutely. The more aggressive and the more concentrated you are, the more willing you have to be to change that bet. And so that can be hard to do, because if you're being that aggressive, if you're being that concentrated, you probably believe in it so much you aren't going to want to listen to those signals. And so it's just
and try to hold for a bigger move. If you if you're thinking, oh, maybe this is the next oil and gas sector to take the lead for a multi-month move, but we'll have to see. A little too early. But good thoughts there, Ed. Thank you so much. I'm going to get my watch list prepped and be ready for earnings season, and get some good names prepped to be ready to go either way in this market. That's the key there. Well, thank you all for watching, and we'll be back next week with more. We hope you have a great weekend.